So another comparison I've made in my writing is that money can be conceived of as an instrument for trading time, essentially. So everything in the world economy, as we know, requires human time to produce it. And prices, market prices, are basically just exchange ratios of any one thing against anything else denominated in money, right? Instead of saying this house costs 11 cars, we say this house costs $440,000, which is equivalent to 11 $40,000 cars. But what we're actually pricing is the human time necessary to produce the capital either that we're trading or the capital necessary to produce the capital that we're trading, right? So all at the base layer of all economics is time. That's what economize means, right? To accomplish greater results in less time, essentially. And in that respect, since money is by definition the most liquid form of capital in the marketplace, I say that money is emblematic of human time. It's our tool for trading time with one another. And looking at it through that lens, that's another aspect of why gold became money, because it was the substance that best satisfied the properties of money, but scarcity specifically was closest to the absolute scarcity of time. Right? Time is the one thing we cannot make any more of, and it's the only absolutely scarce thing in the universe before Bitcoin. So now, and that's another interesting aspect of Bitcoin, is that there are only two absolutely scarce things in the known universe, and that is time and Bitcoin. So it perfectly mirrors the absolute scarcity of time, which money is intended to tokenize in the marketplace. So it's like gold historically served this function well, but it was imperfect, right? Gold is still, even though it's the most relatively scarce thing, it's not absolutely scarce. So in the invention of Bitcoin, I argue that we've actually stumbled upon a discovery of absolute scarcity. And this makes it, again, the most perfect monetary technology for transacting the fundamental substance that economics is built on, and that is human time. And I just believe that, historically, free markets always zero in on truth, right? This is all of individual market participants sort of acting in their own best interest, inquiring about the nature of reality through experimentation, through entrepreneurial effort, that we stumble upon innovations that actually get us closer to something that best satisfies the wants of the most people, right? That's what capitalism is. And I think in that grand sense that Bitcoin might actually be kind of the apex of capitalism. Money is the most important tool for any trading society, and Bitcoin is the best form of money we've ever created, which just makes it super interesting. Like it's hard to understate how significant of a change this is. Like if it's a technology disruptive to gold, and gold is what underpins the sovereignty of all central bank and nation state institutions in the world today. So they're sort of having the carpet pulled out from under them by software. And this is just another manifestation of Andreessen's thesis, right? Software is eating the world. But now, very interesting, we have digital technology, Bitcoin, actually going head to head with the most important tool in the world, which is gold. So this is the latest and greatest test of digital technology's disruptive potential on the world. Bitcoin has grown in price since 2009, since first traded on the open market, over 1 billion%. So it's far and away the highest performing asset in human history. A portfolio of 95% 95% USD, 5% Bitcoin has outperformed the S&P 500 over the past decade. It offers the highest Sharpe ratio of any asset class, which is return per unit of risk. So even the volatility bugs out there that say it's too volatile, that sort of diffuses their argument. And then it's also, very importantly, it's uncorrelated to traditional capital markets, which makes it the perfect portfolio hedge. And I think you see markets waking up to this truth, specifically with Michael Saylor's recent move at MicroStrategy. They invested $250 million into Bitcoin in early August, which was making Bitcoin their primary treasury reserve asset, and the totality of their inflation hedge funds went into Bitcoin. So, and if you run some numbers on that, it's pretty interesting. So they're the first listed company to make a move that significant. They acquired about 21,500 Bitcoin. So of the 41,000 listed companies globally, only 930 could possibly make that same move, which is 2.2% of the global listed companies, based on Bitcoin supply alone, right? So they're kind of the first mover, which there's an incentive to be a first mover in Bitcoin. And they're imposing that move on other companies. And that's just 2.2% of listed companies can make that same move. That's not including sovereign wealth funds. That's not including pensions, endowments, government coffers, et cetera. So I think you'll see more moves like this in the near future. And then looking at Bitcoin through a technology perspective, I think that the apt analogy for people is it's the internet of value, right? So the internet's been constructed in the free market in these layers of protocols, basically. So some of them might sound familiar, like HTTP, TCP/IP, and it's essentially this open source protocol stack for moving information. And in that way, we can consider Bitcoin sort of the latest layer on the internet protocol suite. It's just the fifth layer for moving value on top of this open network for moving information. And that's what distinguishes it from all other crypto assets. So all other crypto assets are they're companies, right? They're liquid venture capital, very high risk liquid venture capital, subjected to little, if any, due diligence. So, and then finally, I think it's the easiest way, if I have 30 seconds to explain Bitcoin to someone, is that it is an insurance policy on the legacy technology of the existing financial system, which is dominated by central banks. And essentially, the more dollars are printed, the more valuable that insurance policy becomes, right? Because as we've seen with inflation, hyperinflation, time and time again, the cohesiveness of that structure is inversely proportionate to the money supply. So the more money supply expands, the more the longevity of that system contracts.